Boom! Welcome. How's it going? Trusting you're doing well. Welcome to M5 Successful Friends, M5 Property Addicts, where we talk about anything and everything around real estate. This is the channel that we pour out everything and everything else that we have learned. If I'm not doing this, I am writing books. My latest book is called From Bad Debt to Property Mogul. You want to get that one. And if I'm not doing this, I am a mentor at a school that we do, which is called M5 Property Varsity, where we teach people like you who are wanting to be successful in the property game. Hey, the information that we pour out here, if it's been value and if this is your first time to you, boom, I am promising you that you're going to enjoy it. But if it is your second, third time and you haven't subscribed, I'd like you to go through right now and hit the subscribe button so that you can get all the content as and when we release. My name is TJ. It is great having you around. Let's jump into the topic. The conversation is that we want to talk about. I've got it written down today because it's a very important subject that I don't think that a lot of us are aware of. So this comes out from a perspective of where, when I started off, I was thinking, I'm going to do property. That's the investments. And I went to class and then they taught me about property. I'm like, oh, okay, I'm going to go and buy properties. But then when I started actually finding properties, then I realized that there's many ways, that there's many strategies, many ways. Yeah, many strategies, many ways, same thing, right? Many ways that one can actually invest in properties. And I started digging and digging, and I realized, oh, actually, you know what? In this property game, some properties or some strategies are best suited for you when you're starting, and some are best suited for you when you're a big boy, and some are best suited for you when you're jumping on to the next leap, right? So today, as a random Monday, I decided, let me package this so that we can talk about it, because hardly do we ever speak about these things, but they are around us every day. So I wanted us to speak about, or should I say, I'm going to share with you today the strategies that are there in property. How many ways of investing in property are there, right? We have always been talking about, hey, there's two ways that you can invest in properties. The first one is that you can do it yourself, and the second is that you can do it with others. Doing it yourself means that you're an active investor. Doing it alongside others like me, it means that you're a passive investor. But let's talk about how you can do it yourself, right? We want to talk about how you can do it yourself. So how many ways are there? Now, it all depends about who you are and what you want to do. But today I'm just going to kind of like throw it to the fence, and I'm going to give you everything that I know that is property related in terms of the strategies that are out there, the ways that you can invest in yourself. Some of these things I'm doing it, me and my partners. Some of these things I haven't done it. I've read about it and I'm like, this is like very big boy, like second generation big boy. I'm not going to be doing it, but I am going to talk about it as I go. The first one that I want to speak about is that I'm sure you've heard the term white boxing, right? White boxing. So what does that mean? And I want to speak to particular set or asset class or properties that fit in the white boxing, right? That fit in the white boxing. So what is white boxing? Basically, white boxing is that it's properties that one can buy. Remember, this is about being an active investor, right? So you buy, and when you buy them, you can literally rent them out. So remember, we are always about passive income here, right? We're always talking about passive income. So all the examples that I'm going to give you today are passive income related. White boxing. So we come back to it. So it basically means that you've got this property that you've bought, or maybe you've built, right? So that's another strategy. You can build, right? So that's development. Second one is that now you have this asset and now you can rent it out. But what is it, right? What is it that you can build? And that's what I want to talk about, because there's so many properties out there or strategies that you can do. The first one I want to speak about in the white boxing, which is quite, I think it's a big of a, if you're in the big boy space, it's like a good hit where we are right now. And if you're in the low end, you're suffering right now, right? For a lot of people. So let's talk about warehousing. So that's the first one that I want to unpack today. So warehousing, you can white box it. What do I mean by white boxing? So you can literally build a warehouse, or you can buy a warehouse, and as is, you can rent it out to the next person. I like this white boxing thing because what it basically does is that you're giving them the shell as it is. In most cases, you can pass on the maintenance to the tenant. In most cases, you can pass on rates and taxes to the tenant. In most cases, all you're collecting is your rent and nothing else. So you have no any other expenses. White boxing, I like that. Yeah, that's the first one. The second one that I then want to speak about is, this is what they term commercial, right? But what is commercial? Let's unpack commercial a little bit. Commercial is the traditional one that we all know. I grew up in an area where we used to have what we call strip malls. So it's not like these big malls that we see today. In some neighborhoods that we do have, we still have those strip malls. And basically, a strip mall is you could have maybe 3 or 4 or 5, 3 maybe up to 5 shops that are in one particular area, and maybe an anchor shop, like maybe a Tops. It's a painful conversation, eh? Tops, right? Okay, let's not talk about that one. But maybe let's talk about an anchor shop, like a Spa or a Pick and Pay, or like a OK, yeah, like an OK. People are like, what's an OK? It's a shop. Yeah, check it out. They used to be big back in the days. They've gone under, I think, or should I say not under, but it's kind of like slowing down. I think I'm not seeing them a lot compared to the Pick and Pay and the Spas that we're seeing, and the Woolies. Yeah, my favorite shop. But if we're now talking about commercial, it basically means that in the strip malls, in these strip malls here, it's a retail space. And again, you can white box those ones. So when you're white boxing, it basically means that you're giving the shell to the next person, and they're going to do what they want you to do. So you don't know how you're going to paint it, because obviously, you know, when Tops is coming, they're going to put in their own branding. So you're not going to do that. Their maintenance, potentially, maybe they've got a butcher there. So their maintenance requirements is very different from how you would maintain the building, right? But things like security, it might be on you, but you can literally pass it on, because again, you don't know what the security of your tenant is. So there's lots of room to negotiate. I came upon the strategy actually of commercial retail when we bought this other building that we bought about almost 2 years ago now. And this building actually was a mixed use. So that's another one, which is mixed use. And mixed use is got commercial at the bottom, which is the shops or the offices, and on the top you've got residential, right? And I like that kind of living, because for me, or that kind of strategy, mixed use, because for me it creates an economy for both parties. So you get the residential guys going in downstairs to buy whatever they want to do, or maybe they've got a shop downstairs. So again, the guy who's downstairs, maybe he doesn't need to go somewhere else to look for accommodation. Accommodation is upstairs. So you kind of like live, play, work in the same area. I love that, right? Especially right now, where we are in the COVID environment. But that's not the end of it. Commercial can also go into things like normal offices, right, which are not big right now because everyone else is going to be working from home. The retail that I spoke about earlier on, doctors' offices, and there's quite a wide range of things that we can actually put in here into commercial, for as long as there is a commercial activity that is happening. So that is what is called commercial. Now, with all these 3 examples that I've given you, and you can go wild, taverns, things like that, you can go wild around that. But the whole point is that you're white boxing, and most of your expenses are being carried by the tenant, not you. That's why I like this strategy. So this is one strategy that you can do. However, when it comes to financing here, it is something that I would like us to talk about a little bit later, because the financing for this particular strategy is a bit different from what we know. So I'm going to stop there and I'm going to ask you a question. Have you heard, right, of this strategy, and have you started doing it? So wherever you are, let me know and say, hey, TJ, I've done this strategy before in the commercial space or in the shop space, whatever it is. This is the white boxing that I'm talking about. So I would just want to find out from you whether you are doing this. If you're doing it, let me know where you are doing it. All right. Okay. That's the first one. The second one that I'm going to talk about speaks to what we kind of like the traditional guys know, and this is housing. So in housing, there's many strategies, and we have spoken about them, some of them in the past in isolation, and some of them we've spoken about them in detail. Now, housing is, they actually say housing is the most risky asset out of property. Surprisingly, surprise, surprise, yes, right? But it's the most loved one because everyone needs a house to stay. And on the other hand, everyone right now in our country, from a South African perspective, we have a deficit, right? So which means that I think Standard Bank, it was about almost about a year or so, they reported the fact that year on year we have a deficit of 600 units, 600 housings that is required. So are we catching up? So I think maybe if this was their assessment like a year and a half ago, potentially we are now more than that, right? Because obviously we're not producing more than the demand. But I'm hoping that with more funding, with you becoming my partners, we can build more, or we can buy more and we can provide more housing and we can catch up to this thing, right? That's how you can become a premier investor, right? But anyway, let me not get excited there. Let me come back to the housing, right? Around the housing, what are some of the strategies that are there? There's quite a lot. There's quite a lot. But I'm just going to touch, I'm not going to explain them, but I'm just going to touch on them as I go along. And if you don't know what they are, I would suggest that you then ask the question in the comments. Yeah, good. Right, the first one that we all know is the rental, which is one family units. I don't like that one at all. Like having a house and then you've got one tenant there, I don't like it at all. Or having a 2-bed, 1-bath, or having a 1-bed, 1-bath, and that's your only property. I don't like that. I've got a good reason why I don't like it. If you want to know, ask me that question. But the second one that I want to speak to is what they call multi-lets. Multi-lets. It basically means that you've got a house, and on that house, you've got multiple people staying in that house. Could be families, could be bachelors, it doesn't really matter. It is multi-lets, right? The third one is what they call backrooms, right? So backrooms, very similar to multi-lets. I haven't really figured out what does multi-lets and backrooms, what's the difference there? But I want to come back to maybe to say, in my view, maybe backrooms is when you are staying on the main property, or should I say on the main house, and then you got backrooms, right? Hence the name backrooms, maybe, right? But if you do know the difference there of backrooms and multi-lets, maybe let me know. I would then assume that maybe on multi-lets, you actually don't stay on that property and you're renting out the entire property, and hence the term multi-lets. But I'll find out if we don't know, right? The other one that I do love, and this is my happy place, especially if it is mixed property, it is the multi-families, right? Multi-families. And this here I like because for me, this is the kind of like the big boy for residential, and these are blocks of flats. So I enjoy buying block of flats. Yeah, I enjoy buying blocks of flats. Why do I enjoy that? Because obviously it comes through, like we spoke about, the areas that I buy. I like buying properties that have mixed use. And for that reason, I get to create this work, play, live in the same property, right? So that way I'm creating my own economy on that one property. The other one that we all know, and it has taken a bit of a knock at this time of the year, is Airbnb, right? We all know Airbnb, but because obviously people are not allowed to travel and things like that, Airbnb has taken a bit of a knock, but I love that strategy as well. Can't wait for it to come back. I've got a few properties that we do Airbnb in our coastal lands, right? But not all the time. only on holiday seasons, right? The other one that we can speak about is student accommodation, right? And this is the most loved ones, where everyone else thinks that there's great money in it. Yes, there is great money if you know what you're doing. But for some people, you could lose a lot of money, because student accommodation is extremely demanding in terms of resources. It's also extremely demanding in terms of your touch point to your tenants, right? Remember, these are kids that are coming through to stay on your property. Now, I can go on, but we've got a course around student accommodation. And if this is something that you're keen on to do and you haven't done it, I suggest that if you've never bought a property before, don't jump into student accommodation. First, jump into a 1-bed, 2-bed, get your feet wet, see how it's going, and after maybe about a year or two, then jump into student accommodation, because it can be tiresome, stressful, and if it's your first deal, you throw in the towel and then you think property does not work at all. Whereas you have just gone through into the wrong strategy that's a little bit demanding compared to who you are. The last one that I want to speak about here in the housing part, and remember, bearing in mind that all of this that I've spoken about, this is all passive income, right? So you're buying and then you're renting it out. But what is it that you're buying, right? So you'd see that obviously the stuff that I spoke about, or should I say the properties that I spoke about that are on the white boxing side, those ones have less touch points, right? And then on the housing part, until to when I started talking about maybe the back rooms, everything else before that is also less, maybe once a month, right? Or potentially not even once a month, because you get to have a property manager that can be managing it. But if you're managing it yourself, obviously it's more demanding. Now, if you had to go in onto the last one that I want to touch on, is the serviced accommodation. Serviced accommodation. So I've gone back in the days when I used to work for Standard Bank. Yes, I did work for Standard Bank back in the days. I would work, I used to stay here in Johannesburg, but I would work in Durban, right? So what used to happen is that we used to hire what is called serviced accommodation. So it was a proper house. However, it was full on like a hotel, So basically what I'm saying here is, take the concept of a hotel, take the concept of a bed and breakfast. It's a serviced house, right? And just very similar to Airbnb, but there is no Airbnb in between, right? And it's more, I don't want to say, not really practical. Like you're at a home, but you're getting everything else being taken care of. I've seen some of the Airbnb, they kind of like offer all the other services as well that the service accommodation also offers. So they're kind of like par. But the way I'd like to explain service accommodation is just like, take a hotel room, right? You're going to pay for laundry, you're going to pay for food, you're going to pay for the bed, you're going to pay for the room. You're in your own room, but in this one big house, and you get to have all the services that you need. You can request for anything that you want, and that's what service accommodation is. The only difference is that you're at a house. This is done in a big block, let's say in a hotel. There are so many of them. I've seen them around. They service a whole lot of companies. So for instance, for me, when I used to work for the company Standard Bank, I used to travel and we used to stay in those serviced house. Back in the days in Umhlanga, I used to like that area quite a bit. Actually, I still do like it. Yes. Then the last one that I didn't want to speak about, remember, this has all been passive. But I want to speak about something else that you can do, which is active. We've got a course that we've put down on M5 Property Varsity, and this particular course is around, it talks about how to become a sourcing agent, And this is one of the reasons, or should I say, this is one of the things that got me into the game and got me some money in property. Basically what it is, on all of these things that I spoke about, if you know of an investor and this investor doesn't have much time, or they do have money on their side, you speak to them and they say to you that, go out there and look for opportunities for me. This is what I'm looking for. you can go out there and look for any of these opportunities that I spoke about, from back rooms to multi-lets to multi-families to commercial. And out of it, you can actually put a price on your service, right? Oh, you're saying, well, TJ, I got confused there. You're saying I can become an estate agent. No, that's totally different from being an estate agent, right? What I'm talking about is someone giving you a mandate to go out there to look for opportunities for you, right? So you are working for that individuals. That's the one way I'd like to say that you can safeguard yourself from being an estate agent. But you can be also an estate agent, and you can be an estate agent who is working for me and for anyone else. Because now what can happen there is that obviously when you're going out to look for these opportunities, as a sourcing agent, you can sign on my behalf. You've got the mandate from me. What money I have, you have. You are representing me, and you can take all the direction there. I made good money out of this, and anyone can do it, because it doesn't need you to have money to actually become a sourcing agent. All you need to do is to know who's got the money, or you might not even need to know who's got the money. There's plenty of people out there. You need to be networking some more, so that you know who's looking for these deals, right? And that course is available on our portal at M5 Property Asset. It is available. You can jump on it and you can become a member first, obviously, for you to access the course. And thereafter, you can start literally making money out of sourcing agent, out of being a sourcing agent. You look for properties, you sell them out. But remember, this is not passive now, this is active, but it can get you to become passive as well. If you have any comments around it, I say drop your comments in here, and don't forget to give me any comments. Like we've been saying, share with me what your thoughts are around all of this, and then out of that we can all learn. If I'm learning, you learning, and if you are learning, I am also learning. So people have been asking me, hey TJ, what is that thingy that next to the light? This is called the cash flow game, right? This is one of my gurus. He's called Robert Kiyosaki, and if you've never read any of his books, I suggest that you go and read a book here that is called Boom, Rich Dad Poor Dad. This is the book that got me into the game. Seriously inspirational, and at the back of that is this book, this game here that is called Cash Flow. Basically, it talks about investing, it talks about how you can get started, and if we're looking at the cash flow game, it teaches you the things that you wouldn't do normally. So it's a fun game. We play it here at my house, but if you don't have the money to go and buy it, you can play it online as well, and there you can kind of like do what you can play with other people, random people that you don't know, or you can play with people that you know, in a couple, 3-4 people. It's fun when there's like 4 people and above, right? It really is fun. So that's what it's all about. It's a game that will teach you how to invest. So it talks about investing houses, investing about paper money, buying shares and things like that. So you can kind of like do it online without having to do it in real day. Yeah, Poyaka. So let's get out some of the administration out of the works. So you all know we've got a school that's called the M5 University, and that school is designed to help people that are wanting to be successful in property. And for as little as 297, you become a member, and it really just works out like a subscription. You know, like you got a DSTV, like you've got Netflix. For as long as you pay on a monthly basis, you get to have access to the information that is there. So that's what it is, the M5 Property Addicts, M5 Property Varsity. And I've got a business called the M5 Property Addicts, and this is where I work every day of my life. I don't have any other job. This is part of work, by the way. Yeah. That's what I do, and every day I am out there looking for opportunities to make sure that me and you, we are making money out of property. And you could be asking yourself, me and you, yes, you can become an investor with us at M5 Property Addicts. If you've got 100,000, minimum 100,000 and above, we are glad to have you on board as an investor. you become what is called a premier investor with us, and out of it, you get a return. I promise you, it is going to be nothing less of that the bank is giving you. Right now, the bank's on single digits in terms of returns. I'm on double digit. Yeah, we are on double digit, so we can give you double digit on your money, which means that your money is working fairly harder for you.